All right, guys, we're going to review the dot-com burst and the 2008 bear market from the collapse in the housing sector, looking at NASDAQ. So first, the back test. This is my best system on NASDAQ. You can see here 60% win rate, profit factor 2.8, $2.8 made for every dollar lost, with a 95,000% return. Here we have the green line as our system and the blue line as buy and hold. So let's go ahead and check it out. Now, before we dig into the system and how it traded, let's just look at NASDAQ. This is an asset that historically had booms and busts. It could be that this 2000 bubble is an aberration, but the 2008 drawdown was also pretty steep. And the 2022 bear market was kind of severe in both its duration and intensity too. So this is an asset that does move up and to the right, but does so in boom and bust cycles, which maybe aren't as extreme as Bitcoin, but even back then, this is a pretty insane move down, 75%. And it's possible these things can happen again. We might think these things won't happen again because, as a policy, the Fed protects the stock market, and that may or may not be true, but it's important to look into the past and protect yourselves. I don't know about you guys, but I got into trading not just to make money, but to protect money. So, one of the ways to protect money is to stay out of bear markets. So, man, actually, honestly, if we allow for, check this out. This is going to make the results go crazy, I think. Let's allow for more pyramid positions here. Oh, doesn't work. We'll come back to this. I'm curious if this is going to improve results or not. So we had 100,000% with a 50% drawdown. Nope. 5 pyramids it is. Okay. Anyways, so I put out a video recently about my Bitcoin backtest, and I've done a similar thing with, let's reduce the size. I've done a similar thing here with NASDAQ. And what that is I found if I eliminate the dip buy, it actually improves the backtest results. So we think buy the dip, but from what I'm finding on a lot of assets, actually removing the dip buy improves the results. Oh, I was on the wrong time frame. That's why it looked funky. Um, okay, let's go back. Let's crank up the pyramiding. I was on weekly instead of daily, which is why I was giving a weird result. Okay. 300% drawdown is not it, right? So I guess, yeah, we'll stick with the five pyramids. Okay. So when you buy dips, sometimes it keeps dipping and you participate in these massive bear markets. So for NASDAQ, we actually had a decline of a little over 80% from peak to trough. And if we don't trade dips and we also have a filter, we don't trade under the 200 moving average. You see here, there were buys that happened in here, buys that happened in here, and it just rode the trend. Exited everything not at the top, but near the top. Gets out and doesn't re-enter from the year 2000 to the year 2025, no, 2023. Okay. So yeah, all of 2001, all of 2002, 2.5 years out of the market. It exits from here to here. Also, the market's down 70% between its sell and the next buy. Really amazing. Now, similar thing happens in this bear market where it gets stopped out of its positions and it re-enters 23% later. It's not even in the market during this panic drop. It doesn't trade from 2008, June 2008, or December. It's actually out, yeah, January 2008 until June 2009, so a year and a half not in the market. Can see it getting in, getting out, kind of participating in some of these moves up. And we see the 2008 decline, does a decent job of sidestepping that. And again in 2022, it looks like it takes one erroneous trade in here. But other than that, gets out and gets back in 15% later, about a year later. So one of the reasons why strategies like this outperform buy and hold is not because they make more money in the in the bull markets, but because they're effective at sidestepping the bear markets. And again, a couple filters that are useful is not trading long under the 200 moving average and potentially not doing dip buys at all. So breakouts over the 200 moving average allow you to be a dollar cost average buy and hold investor. There's a couple, and this one, there's no conditional close. You just trail the stop to a failed exit or a failed breakout and then just kind of ride it. So yeah, I hope that helps you prepare you for not that this is a prediction of this, but the probability that this possibility that things like this can happen and just how to be prepared. They don't happen all the time. It happened in 2000, it happened in 2008, and it's happened in 2022. And then there was a couple sharper ones, like the COVID crash was pretty crazy. But history tends to repeat, and if you trade long enough, you're going to see some things in the lifetime that might not be normal, but might be on the charts if you look back far enough. So if you're interested in the system, there's a link to it down below. Go check it out. Appreciate you all. Much love. Talk to you all soon. Peace.